This is Ron Tate from Group 2 presenting the HDFC Bank case study. Some important facts. HDFC Bank is one of India's leading private banks. Online banking was in its early stages in India. In June 2001, the RBI issued guidelines for Internet banking, including requirements for security policies, penetration testing, risk management, and documentation. HDFC started offering online banking services soon after publication of the RBI guidelines. HDFC was a private sector bank with 24/7 service through self-service channels like ATMs, phone banking, and internet banking. As a young entrant into the Indian banking market, HDFC had a clean IT slate. They had all of the latest technologies and had no cumbersome legacy system to maintain. Adaptive risk modeling assigned a risk score to each transaction and decided the level of intervention by the system. The bank had its central data center and backup systems located in two separate sites. In August of 2007, HDFC was the target of a phishing attack. They had been using first-level security. HDFC partnered with RSA Security for 24/7 monitoring. They also created a 24-hour cooling period for transfers to non-beneficiaries. There were also new security checkpoints designed to determine suspicious activity. It became important to measure the rate of false positives. HDFC began asking a series of questions to enable secure access. Online dormant accounts were now becoming a vulnerability. Proposed IS infrastructure would have separate authentication servers and online servers. Key Issue 1. Should HDFC authenticate the identity of the account holder or the transaction? The alternative courses of action are authenticate the identity of the account holder using multi-factor authentication in the form of SMS text messaging or install IS protocols to authenticate the transaction. The pros for authenticating the identity of the account holder using SMS text messaging are that it's considered to be a strong means of securing a transaction. The majority of consumers find it easy to use. Users with smartphones and cell phones would be protected. The cons: propagation transmission problems may cause reliability issues. A thief could gain access to the user's phone. Users may not be able to conduct transactions if they do not have phone with them. Customers may have provided an incorrect means of contact. Only customers using two-factor authentication will be protected. It not only depends on the system affiliated with HDFC Bank, but it relies on carriers as well. The pros for installing IS protocols to authenticate the transaction are that it would protect all of HDFC Bank customers. Customers would not be inconvenienced due to carrier propagation problems. It would not be reliant on customers remembering to bring their device. It has the capacity to provide more continuity of business in case of a disaster. It provides a broader foundation upon which to build more security protocols in the future. The cons: the cost of integrating the new IS protocols will be high. It will take time to implement. A campaign to educate consumers on how their transactions are being secured would need to be developed. The recommended course of action is to install IS protocols to authenticate the transaction. Ultimately, incorporating the necessary IS protocols that will provide protection for all transactions occurring through HDFC Bank will be more cost-effective in the long term and will show a degree of prescience on the part of Mr. Salvi. In their current developmental stage, HDFC Bank needs to allocate the majority of its funding for security involving broader system monitoring for all transactions. It is imperative, however, that part of the budget needs to be allocated towards the implementation of multi-factor authentication for high-risk transactions. Key Issue 2. How do we ensure the security of online transactions while still keeping customer convenience as a priority? The alternatives: invest in biometric authentication for high-risk transactions, text or email the customer a token for high-risk transactions, allow users to save their usernames for low-risk transactions. The pros for investing in biometrics are that it would avoid the need for more inconvenient forms of multi-part authentication like tokens and security questions. Biometrics are difficult to forge. The cons: although it's not easy, biometrics can still be forged. Some biometric technology isn't quite mature yet. Since most users' devices don't have the hardware for biometric scanning, special devices would probably have to be shipped to the customers. This would increase the cost for HDFC Bank and to the consumer. Text or email the customer a token. The pros of this are that users wouldn't need to have a special device or application to generate tokens. A text message usually can be read as a notification, so this would be more convenient for the customer. If a fraudster gets someone's phone, they can easily fool the authentication system. If the user contact info isn't up to date, they'll have to stop and update their info before they can log in. The pros for allowing customers to save usernames on their normal computers for low-risk transactions are that customers wouldn't always have to enter their username. Customers wouldn't forget usernames as often. The cons of this removes one layer of authentication. However, the risk should be low because we're only removing the username requirement on private trusted computers. If the user logs in with a saved username and then proceeds to conduct a high-risk transaction, the transaction may be interrupted for further authentication. Recommended course of action. For low-risk transactions, allow customers to save usernames on their normal computers. And for high-risk transactions, text or email tokens instead of requiring a special token device or app. For low-risk transactions only, we recommend saving usernames for trusted computers because the risk can be managed using our current risk assessment system. Thus, we can save some users the hassle of typing usernames without having to compromise security during the riskier transactions. For high-risk transactions only, we recommend texting or emailing tokens because it'll save the users the hassle of having to open a separate application or having a separate token device. The risk created by lost or stolen cell phones is already a risk with our current token generator, so we will increase convenience without increasing risk. Key issue 3. Should we go for an on-site model or for the cloud model? The alternatives are the on-site model and the off-site or the cloud computing model. The pros for the on-site model. An on-site model carries a low rate of systemic failure because the servers would be an integral part of HDFC's own local area network. With the help of in-house servers, HDFC Bank can have a good command and control on the IT. With in-house servers, the bank would have to strike a balance between competing with idle capacity for the present and ensuring scalability for the future. In-house servers would also lead to capital expenditure being spread out over a longer time frame. The cons: an off-site model would take longer, an additional 6 months to put into commission. Data centers have fixed capacity. There should be a separate team required to maintain the servers deployed at HDFC Bank. The pros for the off-site model or cloud computing. An off-site model requires a separate medium of communication between HDFC Bank and the IS vendor. The internet can be used as a medium for this communication. The main advantage of the cloud is that it can expand and contract depending upon the needs of the user to scale up or scale down the relevant computing service. Cloud computing has several components, including storage databases, integration, testing, and infrastructure. A vendor might offer components individually or a package deal. The cloud model offered by RSA Security could go live in about 9 months. The cloud model has multiple options for networking connectivity like the internet. Built dedicated bandwidth, proxy servers could be hosted by a vendor. The cons: if the internet is used as a medium for connectivity, then the data security is potentially less reliable. As cloud service providers take care of a number of clients each day, they can become overwhelmed and may even come up against technical outages. This can lead to HDFC business processes being halted. Although cloud services implementation the best security standards, provide the implementation of the best security standards, storage data and important files on external service providers always open up risk. Using cloud means the bank needs to provide access to important business data. Our recommended course of action is to use the off-site model or cloud computing. Due to the low amount of cost and time to implement and deploy the servers, an off-site model is the best fit for HDFC Bank. The number of customers using HDFC Bank services is growing each year, and due to the nature of cloud computing and its ability to expand and contract, HDFC Bank will be able to manage the increased number of customers more effectively without establishing any new software and hardware systems. By using the RSA security model, HDFC Bank can secure their customers' sensitive data more effectively and efficiently. And that concludes our case study. Thank you.